This session is about the future of cryptocurrencies. There's been a surging interest in cryptocurrencies over the past year and subsequent price rises to match as well. Cryptocurrencies, blockchain, this is technology that's been hailed by some as the next version of the internet, while others have called them a bubble and a fraud. But just what does the future of cryptocurrencies hold? I've got a fantastic panel really here to discuss that with me. Jesse Powell, the CEO of Kraken, which is a big cryptocurrency exchange. Next to him, I have Nick Spanos, who is the co-founder of Zap.org and the founder of the Bitcoin Center. Next, we've got Qianlong Wang, the president of NEM. And then after him, Lawrence Wintermeyer, the co-founder of Ellipsis. Guys, I want to kick off this discussion with a high-level chat. What really drove people into cryptocurrencies last year? Jesse, let's kick off with you.
Well, we saw a lot of retail investors coming into the space last year, I think largely driven by some positive regulatory outcomes and the media. And obviously, like the price, anytime we see a massive surge in the price, we see a lot more media attention. It's sort of this cyclical process where it encourages more investors to come in. We also saw more institutional investors getting a lot more comfortable with the space. The Japanese licensing framework there, I think, encouraged a lot of people in Japan to get in. And there have also been some other positive moves in other geographies that I think have been encouraging for the retail market.
Nick, what was it that you saw last year and that really drove the price rises as well as the rising interest?
Well, of course, when the price rises, more people try to find out what it is, and they realize after looking at the technology that it's the first trust network of the world, peer-to-peer trust, which has not existed before. And they get enamored by the technology, and they start purchasing it. And also, there were a lot of forks. So whenever you have Bitcoin and there's a fork, a hard fork, you get to get new coins in addition to your Bitcoin. So I think one of the main reasons why the price went up last year is that Bitcoin is the goose that lays the golden cryptocurrencies. So when you have the master, the Bitcoin, you get all the other many other cryptocurrencies as they're created.
Lon, for you, you have a blockchain technology. You've got your own digital token as well. Yours was one of the cryptocurrencies that did see a big spike in price as well. And so what was it that was driving people an interest in your technology?
Yeah, we have been under the radar for the last 3 years. And what happened last year was that there was a growing interest, primarily because we were pretty active in Japan, and we were, in fact, pretty active in Asia. So, and that's where the growing interest came about. And yeah, last year was the greatest price rise, the top 2 price rise in the value of the crypto.
So Lawrence, I want to come on to you. You've just heard Lon here talk about the price rises. Some of the price rises in many of the cryptocurrencies were absolutely extraordinary. Does that worry you at all? You're in the space of the ICO. Many of those coins that have come to market as a result of the ICO have subsequently seen huge price pops. There's a lot of concern that it's just speculating, it's gambling. Those are some of the terms that's been used. So are you worried that this is really a bubble and a crash is just around the corner?
Well, it was an extraordinary year, and I think to put crypto assets into context, it's broadly about a 400 billion market, or maybe 500 back to 400, depending on how you look at it or when you measure it. Which is twice the size of the gold market, and probably substantially the size of many of the commodity markets. And back to your point about what is driving it, most of and particularly with Bitcoin, is a supply-constrained environment. The retail market can access Bitcoin online, so the demand has surged, and really it looks like a speculative market. People really do think they can, really make gains in it. So I think the biggest issue that we have is typically the exposure that retail clients have to cryptocurrencies. And in Europe, one of the biggest issues is that retail clients seem to be leveraged and loaning money to get into cryptocurrencies, and you find advertisements on Facebook, those sort of things. So I don't think that's good for cryptocurrency. I don't think it's good for the industry. I don't think it's good for ICOs. So we really are, Christine Lagarde and a number of people calling for regulation, particularly around cryptocurrency. So I think it'll be interesting to see how regulators react, and particularly focusing first and foremost on exchanges, KYC and AML, and really, again, focusing on the retail area. I don't think too many people are going to get concerned if professional institutional traders are losing money on highly volatile cryptocurrencies, but certainly retail investors need to, be aware of the risks.
Jesse, we'll move on to the regulation piece soon, but I wanted to get your take on when you see this massive volatility. Yes, it's great for you guys at times, but also how are you being responsible to protect consumers as well? Because at the same time, there are a lot of coins coming onto the market. People see them at less than a cent perhaps and say, well, we're going to just pump some money into this. So how do you protect consumers? How do you make sure you're being responsible in listing tokens?
Yeah, I think ultimately consumers need to look out for themselves. Look into the fundamentals of any coin and not rely on any particular exchange to protect them from market volatility. But Kraken does put quite a lot of research into the coins that we list, and we have a very thorough evaluation process where we look at the technicals, we look at the long-term viability of the coin, we look at the regulatory status, we look at how serious the development team is. So if you get through Kraken's process, it's almost certainly not a scam. However, of course we make no promises about the future of any coin. Things can change when you raise $1 billion in 10 minutes, for the founders. So we try to just be very scrutinizing. We have a small set of coins that we list relative to the total. I think there's something like 1,500 coins out there today, and probably a new coin appearing every day. In part, it's just that we have limited bandwidth, and we need to pick the winners for ourselves and not waste time on things that are just a pump and dump going to disappear tomorrow. I still say buyer beware. Be very careful. Look into the fundamentals. Don't just trade off the chart and what everyone else is hyping about.
Nick, I want to get your take. Are there fundamentals? We've seen a lot of criticism of this space. Jamie Dimon calling Bitcoin a fraud. You've got Warren Buffett saying the cryptocurrency space will end badly. These are very seasoned investors as well, and people have taken their warning seriously. How do you respond to those criticisms?
Well, usually someone who, like Jamie Dimon or Warren Buffett. Warren Buffett's good at renting furniture and what other businesses that he does, and we're in a different business. I believe that cryptocurrency is the people's declaration of monetary independence, and it's much, much more than just a financial instrument, even though it does finance much better than anyone else. I believe that, wait, I wrote something down here. There's only 21 million Bitcoin. I knew that. And it's scarce, so we've developed something that was developed that's digitally scarce, because in the past, if you took a photograph and you sent it to your friend, and then they sent the photograph to your friend, and then they sent it to their friend, all of a sudden there's 100 photographs out there. But cryptocurrency, the value of cryptocurrency is that it's digitally scarce. There's only one, and when you send it, then you don't have it anymore. So these people who sell the stock and this and that, once there's a big interest in their stock, they start printing more stock and more stock and more stock, and you should be making money. The volume goes up, but all of a sudden you see it plateau and going down. That's if it's stock. If it's cryptocurrency, there's only X amount. That's why it keeps going up and up and up, and people say, oh, it's a bubble. Bitcoin is not a bubble. Bitcoin is the pin that's going to pop, that's popping the legacy financial systems bubble that's been chokeholding the people for, since it's been created.
Nick, I want to take a point you just said about stock. I'm not sure if anyone in this room is aware of a cryptocurrency called Tether. I'm sure you all are. That is a cryptocurrency that's pegged to the US dollar. There have been a number of reports recently suggesting that Tether is being pumped into the market in large amounts and is actually pumping up the price of Bitcoin and other cryptocurrencies. Lon, have you seen these reports? Are you worried about price manipulation in the cryptocurrency space, and in fact what that ultimately does to your business?
Well, price manipulation is not something that has been that's new. You see that in mainstream markets as well. Manipulation. We are in a very nascent, a growing phase of our industry, and these things are unavoidable. Based on that fact, It will be a thing of the past, perhaps maybe when it's more mature. So in as far as manipulation is concerned, and in as far as what we are concerned as NEM, we are more interested in the promotion of our technology more so than the price itself per se. So on that basis, personally, I have no concern about the manipulation, even if it goes to dust. But looking at the scenario and looking at what Nick has just said, we are at the early stage of the adoption curve. And the technology, especially Bitcoin, is close to 9 years today. And what you can actually see from there is that the technology, the blockchain technology, is a proven technology. And on that basis, it is here to stay. And in the future, we should be seeing something that is much bigger than what we are seeing today. And perhaps when we go into the phase where things are more certain, then you will see less volatility and more on the value of these coins themselves that will perhaps come into the economies of the world.
Lawrence, are you worried about any potential price manipulation derailing this market in its early stages?
Well, yes, absolutely. And just for the purposes of this, Arjun, my journey into crypto or ICOs was, formerly as CEO of Innovate Finance, which was a not-for-profit and on the advocacy side. And so I found people in the community were coming to us and saying, can you help us with crypto and ICOs? I don't actually hold any cryptocurrencies or trade cryptocurrencies, but do quite a bit of guidance, particularly to companies doing ICOs. And so to your point, and particularly as a managed futures trader, there isn't a robust enough taxonomy or definition around cryptocurrencies or ICOs. So, for example, when we talk about Bitcoin, we're talking about a limit of 21 million that is cryptographically hashed every 10 minutes, and the supply is limited. You were speaking about Tether. The issue with Tether is whether it's got a US peg to it. And so what is a cryptocurrency? A cryptocurrency could actually be a cryptographically hashed currency right to a digital currency with a fiat tether. So quite often, I'm not sure people really understand the underlying instrument in this case, even if it's a digital instrument, and what it is that they're trading. And that extends into the the ICO taxonomy of what is a token, what is a crypto commodity, etc. So it's a particularly geeky subject, but it's actually fairly important to understanding the liquidity of the product and how it trades. So getting back to the price distortions, just across if you take a basket of 20 exchanges, just the arbitrage opportunities on the exchanges and the cryptocurrencies is quite significant. And so this whole area of definition, I think, is part of the thing that regulators have really been concerned about, and that I'm not sure people really understand even from an underlying perspective what they're trading. Now, just come back to Bitcoin. In our community in London, Dave Birch made a really good point. So out of the 16 million of the 21 million Bitcoins that are actually have been hashed, a third are believed to have been lost. A third are believed to be in the hands of a small number of investors called whales for the purposes of this. And then a third are out, for retail consumption and speculation. Those economics sound pretty strange if you're a commodities trader or you trade any other liquid market. So I think it's another area that deserves a bit of a look.
Jesse, from an exchange perspective, what do you think of some of these reports around whether Tether has the reserves it says, whether it is just pumping money into the market as well? That could be a real worry for, of course, whether any of these prices make sense and ultimately for your business as well.
Yeah, I think for sure Tether is facilitating investment into the market. If what they say is true, that the tethers are all backed by dollars, then it's real dollars coming in, and it's just a proxy for dollars. And the reason to have an asset like Tether is that it's just so immensely difficult to actually get banking here. So, we've lost a number of accounts in the space, and I think Tether is a way for exchanges that have not been able to get banking to still have a safe haven asset or something, stable that people can retreat to when they don't want to expose themselves to the volatility. As to whether Tether actually has all the backing, I haven't seen evidence or reason really to believe that they don't. So I would, I don't want to put my reputation on the line for Tether, but I'm not suspicious of it.
So despite some of the reports in the market, the anonymous report that suggested that actually it's, really been the cause of the huge price rise and Bitcoin should be trading below $4,500 on that basis.
I'm sorry, can you rephrase the question?
There was an anonymous report, tetherreport.org, and it suggested that Tether is pumping so much money into the market as a result that actually Bitcoin should be trading below $4,500.
I think that's like saying if you cut off the euro from the market, that it would be trading at $4,000. Yeah, of course, if you cut off the inflows, it's going to be trading at a lower valuation. But I mean, I think that statement just reinforces the need for something like cryptocurrency.
Nick, back to your point around printing. Yes, Bitcoin is, of course, limited in its supply, but what about some of the other cryptocurrencies in the market which continue to put more coins in the market that don't necessarily have a supply? Is that a concern?
So are you asking me that if a cryptocurrency starts acting like a currency that's issued by a central bank, should we not believe in it? And I say, yeah, maybe we shouldn't believe in a cryptocurrency that acts like the currency of a central bank. I think we should believe in a cryptocurrency like Bitcoin that doesn't act like a central bank. It disintermediates intermediaries. It's peer-to-peer. It's based on mathematics, megawatts of electricity, bury and create archivable information. And hashing makes sure that no one could change any of the data, and we should believe in Bitcoin more than any currency that a central bank makes, because first of all, if it's pegged to the dollar, I have one Tether. I bought one Tether when it first came out, and I call that my canary in the coal mine, and I look at it once in a while. So I don't believe in anything that's pegged to the dollar, because first of all, the dollar is built on debt, and they could print as much as they want, whatever they want. And when my grandmother gave me a $100 bill that she saved in 1960, she thought I could buy a car or something with it, and I went and I spent it one night on dinner, and I needed to pull even more money out of my pocket. So something that's scarce has value. If you look back in history, things that were scarce were traded for goods and services, not things that are not scarce. So if you're telling me, oh, Tether is a cryptocurrency and it's bad because it acts like a currency from a central bank. That's why it's bad.
So a lot of people in this room, I suppose, want to know what the future holds. So let's move on to the regulation talk here and how you've all agreed that this is a nascent technology. It's in its early days, but there's a future for it. So how does that future become part of the world and the world economy? So Lon, from your perspective, from a regulatory front, what would you suggest to regulators about the best way to go about bringing these cryptocurrencies, bringing blockchain technology into society?
Well, there are basically two parts to it. One is the blockchain technology. The other thing is the cryptocurrency. Now, in as far as the blockchain technology is concerned, it should not disturb the regulatory requirements of many of these countries. The reason is the blockchain technology itself is basically a very powerful tool for the financial industry in particular to manage the flow of funds. It has a full audit trail as demonstrated, in fact, recently with the theft of $500 million worth of NEM coins from an exchange. And what we did was we immediately mobilized the ability for the blockchain to track and trace where all this money goes. So, and as far as the blockchain technology is concerned, it should not. In fact, it should enhance regulatory requirements. Now, when it comes to the trading of cryptocurrency, now this is where the biggest issue is, because these currencies could be used for money laundering. But again, if you compare the size of money laundering in using fiat money, it is a much, much, much bigger problems that we have with the use of fiat money in money laundering. So, but the regulators today are in a learning curve, and many of them, I would say, have insufficient knowledge and experience to actually look at how they could regulate cryptocurrencies, particularly in exchanges. In exchanges, for example, in the same case where Japan, they had some regulations and regulatory requirements for exchanges to exist or to operate in Japan. But what I am seeing now is that CoinCheck, the exchange that was compromised, was pending approval by the authority. So now the question is, why should they be operating before they are given the license? Two is the minimum requirement. The minimum requirement for any exchange that's being regulated should be security. And security is number one. So this is where some problems, it is not the problem of the regulators wholesale, but I think there is some learning curve, and I think at the end of the day, we should see both sides of the divide, the exchanges and the regulators coming together worldwide, and to be able to come to conclusion how they should take it to the next step.
Lawrence, your focus really is on the ICO space, the initial coin offering. We've seen a lot of scams, a lot of frauds in this space. So how do you develop this space from a regulatory point of view that is responsible and that people can invest in a safe way?
Just before I get to that, just to the last point about regulators and cryptocurrencies, it's been another extraordinary week with everyone from Christine Lagarde, and I know the Securities Commission here in the Emirates has also called or warned investors. But simply put, the biggest issue with cryptocurrencies is not just what they are, but from a retail perspective, what's the utility? I mean, can I buy a loaf of bread or milk with it? Well, no, I can't, but I can speculate it. And so I think rather than having regulators run away from it, getting the banking system and the exchanges engaged, particularly in KYC AML, which is the typical institutional response to things. Most banks in the world have to know who their customers are. And I think from an exchange or a banking perspective, now we're seeing European banks get into the cryptocurrency market. It's because they're doing bona fide KYC on the people that are trading it. So the more people that are in the system, the greater light that shines on either exchanges or banks that are outside of the system. So that's currencies. On the ICO front, I'm doing quite a bit of work globally in what I call the advocacy space to look at all of the code of conducts that have been brought together around the world for ICOs. And I think, put simply, I think they're a bit difficult to regulate, but the more that they adhere to some of the basic principles of having transparency for use, so what is it that you're actually going to use the proceeds for? Transparency with the distribution of the token, the size of the token, the rights of the token holder, transparency with the intention of the token, particularly post-sale, and your approach to exchanges. If we can get that degree of transparency to white papers or prospectuses, whether or not we're SEC authorized in the US or we're somewhere as an alternative asset in Europe, we'll probably see a better quality come through. Now, I just have to say, I'm actually a huge fan of tokens if they're done correctly, because I think for people who are really familiar with risk capital and the venture capital world, tokens really offer one of the best opportunities to get almost a high yield investment into a very large number of startups, and that's just the sort of thing that's going to be required in WEF's fourth industrial revolution, that we can efficiently capitalize all of these startups.
Jesse, I want to know, from an exchange perspective, what's the best way to go about regulating exchanges? Because we've seen a few takes across the world. You've got China on a complete kind of clamp down on it, Japan a little bit more open perhaps to it. What's the right way? Do you think exchanges being regulated almost in the same vein as a stock exchange would be too much?
Yeah, well, it depends on the jurisdiction, and I think it's a very difficult question for a regulator, because you have the entire world to worry about. Your citizens and your residents are not just trading on exchanges within your geography, they're trading on any exchange anywhere in the world. if you can buy into Bitcoin, you can send that Bitcoin anywhere. And so if you regulate things too tightly domestically, you will see the exchanges leave your country, or you will see your residents send their money abroad to trade in a more favorable platform. So there's definitely arbitrage happening between the jurisdictions in the world with the exchanges. And I think that for regulators, they really ought to take care not to make it too difficult, because the next stage after the centralized exchanges is the decentralized exchanges. And there you have no control whatsoever. So I think it's in the regulators' interest to help this technology, to help the exchanges that are interested in being compliant and working with the regulators. They should want to see these exchanges flourish and not seek to shut them down or make it, so difficult that people are sending their money elsewhere, to markets that are less regulated.
We're just going to close out this session now. We've got about 4 minutes, so I want you to put your future-gazing hats on. Nick, I want to start with you. Look, we saw the cryptocurrency market really hit some highs last year, and the market cap of the entire thing was, above 500 billion, above 600 billion at 1.2. Where do cryptocurrencies go from here this year? What's your outlook on the space? Because I've heard on one side they're going to crash to zero, and of course another side saying the market cap and the value is going to go to $1 trillion. So where do you stand?
Well, I doubt it's going to crash to zero because they're digitally scarce. The things that crash to zero are if someone can print them print as many as they want, as people want it, then they print more and more of it. Then that can crash to zero. You can printing it, but you can't do that with properly built cryptocurrencies, especially ones that are not based on the design of the dollar or something like that. But I'd like to say about regulation, because I've had some issue with regulation. I opened the first exchange 100 feet from the New York Stock Exchange on the ground floor, and I invited people at 6,000 square feet, I think it was at 600 square meters, and everyone came in and traded, and I didn't have a license or anything, and the whole place became a hub, and then people met and made things. I mean, if Orville and Wilbur Wright, we believe that the Wright brothers invented the airplane. I'm not sure different places in the world inventors change, but we believe that the Wright brothers, who had a bicycle shop, invented the airplane. And if you walked by one night and you heard them talking, you'd think they were crazy or something. If they had to go to the mayor to ask for a license to fly, they would have put him in the mental hospital like they did Marconi. Marconi invented the radio. He said he's going to talk in his box, and then 5 miles away, his voice was going to come out of it. His family put him in the mental hospital. So if you want to regulate this thing, you're only going to regulate your country out of it, because you cannot regulate Bitcoin, but you can regulate yourselves out of the Bitcoin and the future of the world, because we're connected. Everyone's holding a computer, and the next evolution of the data is the scarce data, digitally scarce data that people can trade and build a world around tokenization and oracleization, which is the project we're working on right now, where we take data from the outside world and we launch smart contracts.
Lon, very quickly, got about a minute, so I just need 20 seconds from all of you. Where do cryptocurrencies go this year?
The only way is up.
Lawrence, ICO space, what happens this year? We saw about 5 billion raised last year. What's next?
Yeah, well, hopefully we'll see a better quality come about. But I think to your point, to gold or dust, somewhere probably in between. Retail investors, caveat emptor, and if you're an institutional investor, I'd have as big a basket of crypto, ICOs, and blockchain, blockchain exposure as along.
And Jesse, the final word with you. What's your outlook for the cryptocurrency space this year?
I think we're just going to see an acceleration in the growth. You got a lot more kids graduating from crypto programs in universities now. I think we're just going to see it continue exponentially from here.
Does it break the $1 trillion market cap this year?
I think it does, yeah.
Great. Wonderful. Thank you so much for addressing all the questions and giving us your outlook on the future. Round of applause for the panelists.
Thank you, Arjun.